Hi guys, welcome to my podcast. Today we're going to be having Julian Chavez on. He is a real estate mogul down here in South Florida. He has a brokerage, a real estate brokerage, where he has a couple of agents under him, which they sell properties. He also helps with the process of underwriting loans, and he's also on the buy side of real estate, which is interesting because he's not only selling homes, also buying a good amount of properties here in Florida, which he will dig into today and talk about the whole process of purchasing homes and real estate investing in general. So it's very nice to have you here, Julian.
Thanks for having me. I really appreciate it. I don't know if I'm much of a mogul, but I'd
But
love
you're
to
going to be there one day.
Yeah, I'll be a mogul one day.
There you
But
go.
I love giving everyone knowledge on this podcast. So thanks for having me on.
And that's what we're looking for. But before we get into the podcast, let me just say a couple words about our sponsor. Our sponsor for today is Polar's Bottles. You can go to their website, buy a bottle at polarsbottles.com, POLERCEBOTTLES.com. They are vacuum insulated bottles that keep your drink cold for more than 24 hours or keep your drink hot for more than 12 hours. I use it every single day for my coffee. Keeps it burning hot to the tip just how you want it for the entirety of the day. And then it keeps my water freezing cold when I go to the gym for the entire day as well. And if you want to use it on the weekend, you want to put some Balvenie, which is Julian Chavez's favorite whiskey. It'll keep it cold if you're walking down the beach or you're going to the beach for a Saturday. It'll keep a margarita cold as well. So go out there and check them out. And they're also 33 to 50% lower priced than the competition.
I'm actually going to the Keys this weekend. This is my bottle right here.
There you go.
I'm going to be at the sandbar. I'm going to fill this up with probably Corona or something. And it'll be cold all day.
You don't want to have your beer hot?
Definitely not. That's the worst thing ever.
That's
so
the worst
I have
thing.
something to
You
use it
don't
for.
want that. Yeah. So go out there to polarsbottles.com and get your bottle today. If you use the code podcast10, you'll get 10% off your first order. And go ahead and check them out. They are very great bottles. I use mine every single day, as I just said. So, Julian, before we start, I always like to ask this question to people I meet in general because it gives me a little bit more about their background and what drives them, essentially. So, and how they got to be where they are. So the question is, who were you in high school?
So back in high school, I was really focused on lifting. That was a big thing for me, the gym. But I was always somewhat of an entrepreneur. I was selling basically anything I could make profit on. I was selling makeup on eBay. I was selling fake iPhone chargers, protein powders, anything I could just buy and mark up $5, $10.
Okay,
and
that's awesome, man. Because I actually feel the same way. I was like that in high school too. I used to sell these like headsets that I used to buy on AliExpress and Wish, and I used to flip them in school and stuff. I used to buy, even when I was in middle school, I would buy like these Hershey bars, put them in my locker, and sell them, to kids. I was always trying to find a way to make some money.
Yeah.
And it's awesome because I feel like a lot of like entrepreneurs and people that start businesses, they actually start very young.
Yeah,
And
definitely.
It's pretty interesting.
AliExpress was the place. I remember coming home from school and I'd have to pack like 10 shipments, in my mom's office back there and just like put tape on it. I had no idea what I was doing, but I was still selling that makeup and I'd give it to girls in school and stuff. It was pretty cool.
So you think that helped you when you started your business later on, like right now? You think all those experiences of making money, like buying the stuff cheaper, selling it higher, and that whole process, or?
Yeah, it definitely helped because, I mean, as you do that, you learn, there's right things to do and bad things to do, like if you sell fake chargers on eBay, you're going to get kicked off. And I found that out quickly, probably when I was a sophomore. So
not the greatest business model, but it works for the time.
Yeah, make quick money back then. It was good.
Exactly. So now let's dive in. So IBuys is the company that you started. When did you start it again? I know it was a couple years ago.
That was 2018.
2018. Okay. So what made you get into the process of, let me start my own brokerage, and eventually going to let me start my own real estate fund and purchase real estate properties to invest in?
Yeah, I mean, going back to high school, like senior year, I remember they would go around like the classrooms asking people what they wanted to do. More than half the class said doctor or lawyer. And I was like, I want to be a realtor. And people thought that was crazy. Yeah. But I originally first wanted to do it because you'd go around to any house, and let's say it's a $400,000 house. You just multiply that times 3%. You're like, wow, $12,000.
Yeah.
So I originally did it because I wanted to make quick money, and I was young back then. That's how it was. But after I actually got into the business right after high school, I realized that like there's something greater here than making money. Like you're helping new families find homes, like their forever homes. I still talk to clients that I sold houses to back in, I started the brokerage in 2018, but I started doing real estate in 2016.
Yeah.
I still talk to them all the time. At least, every 3 months, every 4 months to see how their family's doing. So you make a friend there. And that's when I started realizing there was more of a purpose to it than money, then it became better.
Okay. That's awesome, man. Yeah, definitely making, building those relationships along the way and seeing people. I bet it's a great feeling, seeing people that are getting into their first house, purchasing that house, and saying, I found a home thanks to Julian's help. And I think that's an amazing feeling and something great to do. But let me ask you something, because I know I've seen in my experience, I've seen a lot of people that when they were younger, they maybe saw somebody that they looked up to, maybe a uncle or your father's rich friend, or maybe your father, or somebody that you know, or somebody that you saw on TV that you're like, I want to be like that guy one day, right? He's into real estate. I like what he does, and I eventually want to go that path. Was there anybody like that for you?
Yeah, so like my dad he owns a title company. So I looked up to him in, that fashion that he owns a company. But really, when I was younger, someone I looked up to a bit was Donald Trump.
Okay.
Because he was a real estate investor, and then he started with the hotels. And I always thought, being young, that hotels was like the coolest business ever. And like, imagine like living there, living in the presidential suite there. So that was someone I looked up to. And Donald Trump's Art of the Deal was one of the first business books I ever read as well.
Okay. Yeah, I've read the book. It's actually pretty good. It's a pretty good book. He talks a lot about the, how he started off as well, like, how he got into luxury buildings, and, the way he got the properties, the way he got those deals, which are pretty interesting, because I feel like a lot of people, they don't understand that when you're an entrepreneur, it's kind of like an art, right? It's not just like, oh, it's numbers, this or that. You have to be very creative in the way you structure deals, the way you find deals, and that's how you're going to be getting the best deals. And creating those deals or finding a way to get that deal is more of an art than it is just business in general.
Yeah,
and
definitely.
That's one thing I got from that book, so I thought it was pretty interesting. But
yeah, and if you dive deep into like the way that he got started with everything, I mean, it was all based on exceptions from the county, the cities, and everything. It was cool. It was putting a bunch of stuff together. It just wasn't like numbers.
Yeah, exactly.
Numbers
it's,
on a screen.
Talking to this person, negotiating with this one, and it's a bunch of people. You're kind of like the conductor in an orchestra, right? You're orchestrating the whole process of that whole project, and you have to put the right people in place in those positions to be able to succeed and be able to be one of the best at what you do.
Yeah, definitely. And it's kind of like what a real estate broker does now, is that you're conducting everyone together, whether it's the lender, the inspectors, the appraisers, the insurance company, everything. You just put them all together. I mean, it's a much smaller scale than building hotels, but
100%. So from the brokerage, what made you then say, you know what, let me start buying houses myself as an investor and open up a fund to get investors in to, purchase homes for?
Yeah, I realized that, real estate brokers are only as good as their last commission check. So I wanted to build something that was passive, and that was through real estate investing. You buy houses, you rent them out for profit, and as you go on, the tenants pay off your mortgage and the property appreciates. Originally, I had someone that always told me to buy one property a year. And in that first year, I think I bought like 20 properties. But after I did one, the first one was so hard.
Of course.
And after I did, it was a small deal, like $90,000. And after I did one, I was like, damn, this is pretty good. After I got a couple people actually paying the rent.
Exactly.
It's people's worries, are they actually going to pay the rent? Exactly. And they did without me having to reach out or anything. So I said, shit, this is pretty good. Let's buy more and make some money every month.
Yeah. So I feel like, there was probably a lot of fears that you had in the first property, a lot of insecurities, like you just said. Is this person going to be paying the rent? What happens if he doesn't? What happens if I can't fulfill that payment myself? So I feel once you put that foot on the door and you see, okay, they're paying the rents, it's not as hard as I thought it was going to be to get somebody in there renting it. It made it a lot easier for the next properties, right?
Yeah, definitely. That first one I bought like on my own with my girlfriend, and then after that we started the fund.
The fund.
And looking back at the fund, it was kind of what I really suggest everyone to do is we kind of just did things and then figured it out later.
Yeah. I've done that as well. On my side, it's kind of the way you have to do it.
And looking back, if I would have known all the obstacles we had to go through to buy all those properties, to raise the money from the investors and all that, I probably would have been too scared to do it. So I'm glad I didn't know.
Yeah. And then the other thing is, like if you try to figure everything out before you go and you take that risk, I feel like you're not, exactly like you said, you're not going to take that risk because you're never going to have it all figured out when you're starting off. There's so many new things that are going to pop up that you're going to learn with experience. There's so many things that you could just learn by, just seeing the whole process, how a fund works, the whole process in buying a property, but you're not going to understand the problems that come with it until you have the fund and you start purchasing the properties.
Yeah, a big problem right now with younger people is that they get analysis paralysis.
Yeah.
Like they're
Yeah.
looking at every single variable ever, and sure there are a lot of variables, but you just gotta first they come and then you gotta figure it out later.
Yeah.
If you start trying to prepare for every single variable that could come, I mean, you're
There's
not
so
gonna do
many.
anything.
There's always going to be an extra variable that you have to say, oh, I'm not prepared for this. I'm not prepared, and you're just going to be analysis paralysis. So
Yeah.
yeah.
Yeah, and if you don't want to risk anything, there's no rewards. So
Exactly.
just keep your money in a savings account.
Yeah, that's one thing that I've noticed is like to be an entrepreneur, you have to have you have to be open to a lot more risk than a regular person. To be an investor, you shouldn't be getting into that much risk, but for an entrepreneur, you do, right? So when you're an investor, you kind of have to find properties that that the cash flows are going to be secure. For example, at real estate, you have to find properties that that the cash flows are going to be enough and more than enough to be able to pay off the mortgage and all these things. So you're being a lot more risk averse when you're going into the investments. But as an entrepreneur, you're putting a lot more money up front and you have to have a higher tolerance for risk than as an investor. And then, for example, in stocks is the same thing, right? If you're starting a business, you have to be have a very high risk tolerance because there's so many things that can go wrong and most entrepreneurs fail, right?
Yep.
But as an investor, you have to find businesses that are not risky, that you're going to get secure cash flows, and that's what you're looking for, like when you're looking for stocks or private businesses. So I think there's a difference there that people have to understand, and that's why, like, for example, what I'm getting to is there's a lot of people, young people especially nowadays, that they look at investments and they say, okay, this is high risk, high reward. As an investor, you shouldn't really be getting into those things. Like, for example, like cryptocurrencies or very volatile stocks that don't even have earnings, or, for example, properties that they're just looking to get appreciation in and there's actually no cash flow there. So in real estate specifically, what do you look for when you say this is a property I would invest in compared to this is a property I would not touch?
Yeah. I mean, in real estate, one of the biggest factors for me is really the area. If you wouldn't live in the area that you're buying in, I wouldn't buy that deal, just because the tenants that are going to come with that property, they're not going to be like you at all. I mean, it's going to be a bad area. There's probably going to be crime and all kinds of things. So definitely I would buy in a good area. I would buy on the lower end of whatever market you're looking to buy in. I'd buy on the lower end. I wouldn't buy like these very sexy properties that you could possibly make a bunch of money on doing Airbnb rentals or something. I'd just buy something clean on the lower end of properties, 200,000 more or less, 300,000, something under that price range. That way, if there is some kind of a shift in the market, you'll still already be on the lower end of properties.
Okay. And when you look for properties, do you just say, I'm going to buy a property because of the cash flow that it's giving me in the specification that you just said, like this certain area that I would live in, lower end, but I'm looking at the cash flows? Or would you say, I'm getting into the best area to see if I can get the most appreciation possible? What is it you look for?
Yeah, there are some investors that are appreciation buyers. I'm not one of them.
Yeah.
I'm trying to build cash flow.
Yeah.
So
yeah.
I need it to cash flow at least $500-600 a month. I know there's more percentages that go into it, but I like at least $500-600 because every property, even if you go on the lower price range, where if you cash flow a good amount based on the price, like you could have a crazy high return, 40%, but your cash flow is only $200 or something.
Yeah.
Then if something breaks, you lost all your money.
Yeah.
Like the returns look great on paper, but each property, no matter what their cost, like a refrigerator costs the same in a $100,000 property than in a $50,000 property.
So to getting to that point, that's something that I want our viewers to understand as well. And it's, when you're just looking for appreciation, that's the wrong way to look into investing, especially in my opinion, and I believe Julian's opinion too. So for example, if you're looking at a business, just to get away from like real estate, so just put a different comparison, just because it's a great business does not mean that it's a great investment. So it could be an amazing business. Like I'll give you an example, like Tesla when it was at its highs. It's still an amazing business, but that does not mean that it's an undervalued business and a great investment at that price. So that's why when you're looking at real estate or stocks or businesses or any type of investment, you have to understand the discrepancy between the value and the price. And you have to try to get into things that are undervalued. That's why Julian said, for example, the lower priced ends of the properties, that in that good area that you're looking for, because those are the ones that are the most undervalued properties that most likely will appreciate, but that's not the determinant factor for getting into that investment.
Yeah,
right?
and I think appreciation buyers are really they're speculators.
Yeah,
like
exactly.
you're buying an asset and you're praying to God every day that it's going to go up in value.
Yeah, and that's the only way you'll make money out of it, because those appreciation buyers are most likely not getting cash flows.
Yeah,
or they might be breaking even maybe even less, losing a little bit of money a month,
and just hoping that it's going to appreciate. And honestly, anyone that's bought a property in the last 5 years, they've done very well being appreciation buyers.
Yeah.
But who knows that trend is going to continue forever.
Exactly.
You know, I mean, and going back to like undervalued properties, comparing them to undervalued businesses, that's a good comparison on your end. But like for a property, for example, let's say it's a property with 1,200 square feet and it's only a 2.2 right now. Maybe you're able to squeeze in a 3.2 in there, and you just bought a property at 2.2 price, and you're able to convert it to a 3.2 with only putting, you know, a wall of drywall up, which costs under $1,000.
Yeah. That's
And that in itself added a bunch of value.
Exactly.
There's just little things like that you do.
That you look for, and you get that with the experience, just getting into your first deal. So, talking about getting into your first deal, what would you recommend buyers? Viewers here, if they want to get into their first investment property or first real estate property, what's the best way to go about it? Or if there's several tactics that they can use, you know, to find a deal?
Yeah, everyone's situation is different. Something that's really popular right now, they call it house hacking. I'm not sure if you're familiar with that term.
I've heard about it, yeah.
But it's basically like buying, let's say you buy a duplex, and to buy a duplex, you could come in with an FHA loan and buy with 3.5% down. You live in one unit and you rent out the other one. That's a really good way to get into real estate investing. I'm not like the biggest advocate of that because I don't think it's a full investment because you have to live there and whatnot. But I would buy a regular real estate property with a DSCR loan and use 15% down.
Okay. Well, just for the viewers, because I know there's a lot of viewers that don't know, what is an FHA loan?
FHA loan, it's a government-backed loan. It's typically used by first-time home buyers. It doesn't have to be a first-time home buyer. You just can only have one FHA loan at a time.
Okay.
And you could buy a property with 3.5% down. I can't remember exactly what the mortgage limits are on it now, but they go pretty high.
Yeah.
Like you could buy a duplex in Miami with 3.5% down using FHA.
Okay.
FHA is also good for someone that wants to extend out their debt-to-income ratios all the way up to 57% more or less.
Okay. Got it. And with the FHA, you have to live in the property, right? It has to be your primary residence, and you have to live in the property.
Yeah, you do, for at least 1 year.
Okay. All right. So what's another strategy that maybe somebody, if they say, okay, I don't want to go with the FHA, they would have to save about 15%, or maybe like, what about a conventional loan? Isn't the limit like 5%, I think?
You could do conventional 5% down, but it's going to have to be a duplex.
A duplex.
So, because you're going to have to live in it.
Yeah.
For you to say that you're not going to live in it, it's going to be 15% down.
Okay.
Minimum.
Okay. Got it. What about, I know you've done a couple of deals like this. Maybe you could walk people through the process, because I think it's an interesting way to make some money in real estate that a lot of people don't use, but wholesaling. So I know you've done a couple wholesale deals. So
I have. When I first heard about wholesaling, I had no idea what it was, and I used to think that it was a bad industry.
Yeah.
Really, it's not. I've done, I think, just a couple of wholesale deals, and wholesaling deal is basically like, let's say you're selling a property, and I'm going to tell you that I'm going to buy it. Let's say you want $100,000 for it, so I get under contract with you, and I turn around to my investors and I try to sell that contract to them, putting basically a finder's fee on top. So I might sell it to them for $110,000, and I keep that $10,000.
Got it.
But everyone has to be really careful though with the way that they use their terminology. Like you can't,
documents, everything.
Yeah, and you have to separate. Let's say you were already a realtor. You have to separate being a realtor from being a wholesaler. You can't come in there with your realtor hat on and then wholesale a deal.
Yeah. Of course, makes sense. Yeah.
And you should tell them that. You should be as open as possible, because there are some wholesalers that are scammers that, you know, the people that are selling them houses think that they're selling it to them.
Exactly.
And I think expectations from the beginning should be set that that's not what's going to happen.
You know, always have honest business.
Yeah.
Best way to go. Yeah.
That way it doesn't bite you in the ass.
100%. Yeah. So I want to ask you this. So interesting question. I've seen a lot of perspectives. I've seen a lot of people talk about it. Different, you know, people in the industry of real estate have said, you know, I think real estate's not going to go down. Some people say, you know, I think there's going to be a huge crash. Some people say, I think there's going to be a correction. So where do you see real estate going in the near future and then like the next 5 years?
Yeah, I think that's probably more specific to each state. In Florida, we're probably not going to have a big problem, but definitely I think prices will slow down a little bit. Like they have to. The interest rates have gone up from 3%. Like a borrower in December of last year would have gotten 3%. Now they're getting 5.5%.
Yeah.
That's cutting people's buying power. Every percentage point is about 10% of buying power that's cut off.
Yeah. Wow. So that's huge. So if it goes up 5%, then essentially somebody that could have bought a $300,000 house last year can only buy a $250,000 house this year, right?
Yeah.
Exactly. So that's huge. So then that means, people are going to be offering less for houses. People are not going to be able to ask as much, and that just drives prices down, right?
Yeah, and it hasn't happened yet because real estate always happens a little bit delayed, just because people that are closing now, they have a rate from 30 days ago, and the rates 30 days ago are much better than now. So as we keep progressing, it'll probably, get a little bit, it'll probably slow down a little bit, because there's also a lot of buyers now that I'm sure that are shopping that think that they still have a 3% interest rate, because they haven't talked to their loan officer in 6 months.
Yeah.
So they think they're getting 3%, and they might come back to the table. The rate might be 6%, and they might not qualify anymore.
Yeah.
Because everyone gets qualified for their maximum potential, which is at 50% debt to income ratio.
Mm-hmm.
So they might not qualify anymore if the rates doubled on them like that, and they don't even know it.
Yeah. Yeah. So you don't think the Fed's gonna? I mean, they're already gonna hike rates a couple more times this year, but you don't think they'll turn track maybe like next year and say, we're gonna find a reason to lower rates back again? Or
I don't know. What do you think about the gas prices?
I mean, yeah, that's the thing. I feel like the Federal Reserve is in a position right now where they're doomed if they do, doomed if they don't, right? Like right now we're about to go into a recession. It's looking like we're going to go into a recession, but what I think the Federal Reserve's, the dilemma they have is, if we don't hike interest rates, we're not going to we're not going to stop inflation, right? So the way that works is, if they hike interest rates, the price of money essentially gets more expensive, and that makes prices, like, that stops inflation, right? When interest rates go up, it'll stop inflation, or it'll kind of like slow it down. If they keep rates low, if they hike rates, the other problem is, they'll slow down inflation, but they'll stop growth, right? It's harder for people to get money. It's harder for people to get loans and fund investments, or fund businesses, or start businesses. And that's the dilemma they're kind of in right now. So I don't know what the solution is going to be. And my business is not to predict what the Federal Reserve is going to do either. That doesn't determine whether I invest in something or not at the moment. But I don't know, it's interesting to see what they're going to do in the near future.
The inflation is just crazy. The government got a helicopter, and they had cash, and they just threw it down on everyone. That's basically what happened. Yeah. And now the poor Fed, everyone's talking shit about the Fed because they're raising rates, but they have to.
Yeah. They have to, yeah.
And a lot of people say that they're not going to stop raising until the interest rates meet the inflation rate, which whatever the true inflation rate is. Yeah. Because what does the government say the inflation is right now?
I think last time I saw, don't quote me on this, but I believe it was like 7 something percent, and I think it's going up like every quarter.
Do you think that's a true rate of inflation?
No, it's definitely not, because I think, I forgot exactly how much, but it's definitely more than 30%, close to like 40% of the money supply that we have right now was printed in the last year and a half. So if you really think about it, the way they measure inflation is with the CPI, which is the Consumer Price Index, which is they get a basket of goods, and every single year they measure it, and they see the difference in percentage every single year, but they change the basket of goods and what's in the basket of goods every single year, so they can essentially conveniently change it depending on how they want to portray that inflation is right now. So for example, if this bottle of whiskey was in the basket of goods and it went up 50%, and they take it out and they replace it with another item that went up 10%, inflation is going to be lower, right? But if you really think about it, the money supply is stating, okay, there's 40% more money available this year than there was last year, which essentially means, you really think about it, that inflation is a lot higher than 7%.
Yeah, definitely. I think they're manipulating, and they're making that number.
Yeah.
Fake,
and I feel they have for many years too, right?
Yeah.
But
yeah, definitely, because inflation was flat for a long time.
Yeah, it was. And it was, they always had a target of 2%, but it was never there. So, now the excuse is, we don't mind letting it run a little higher just to replace all those years that it was less than 2%, which in fact, for many years, we actually had, in my opinion, real negative rates. So essentially, like, let's say you invest in a bond, right, a 10-year treasury or something, and you're getting a 2% back, but there's inflation of 3%, or you're getting 1% back, there's inflation of 2%, your real return is negative 1%.
Damn,
right?
That's an interesting way to look at it. I've never looked at it like that.
Yeah, like if you think about it, let's say I have $100 and I invest into something that's giving me a 5% return, right? And that means that I get $5 the next year. But now let's say there's an inflation rate of 10%, that means that $5 is actually worth, I went to 105, but that's actually worth less than that 100 that I had last year, right? It gives me less purchasing power. So there's actually a negative real return. I see. So yeah, it's pretty interesting, and we had that for, I feel like, a good amount of years. So I think, I don't think we're going to go into hyperinflation or anything, but I do think that they're going to keep on hiking interest rates. If I were to put a guess out there, keep on hiking interest rates, and our economy is going to have to slow down a little bit. We might go into a recession, but it's not going to be the worst thing in the world either.
I think everyone could agree that we probably we could use a correction on pricing.
Yeah,
for everything.
100%.
Like not just in real estate, in stocks and cars and everything, gas. I mean, I hope.
Yeah, cars are out of this world right now. You know, I know a friend that he actually bought a Tesla, and you know how they have like when you buy it, there's a whole waiting period of like 6 months or something. So he bought the Tesla, he waited until he got it, and immediately when he got it, he sold it for $10,000 more than what he got it for.
Holy crap!
So it's because there's a waiting list. You know, it's kind of like a Rolex. When you buy a Rolex, you go to the dealer and you're like, okay, where is it? They're like, oh yeah, it's basically in back order for another 2 years. Yeah. You have to be on a waiting list. So that's why in the secondary market it sells for so much more.
Yeah. Or you just go to that Rolex store and you buy a bunch of diamonds.
And then
you buy everything but a Rolex, and they'll somehow find that Rolex that you want.
They'll find the Rolex. They'll have it there for you if you're buying a lot more things. Yeah.
Yeah, it's crazy.
So it's interesting, you know.
Yeah.
So walk me through the process of purchasing a home. So just walk me through that whole process. If somebody's gonna go buy their first home, what is it that they have to go through? What requirements do they have to meet? And how long does the whole process take? How much does each part of the process take?
Okay.
But, just walk me through that. So
yeah, so the first step I would do for any buyer suggesting them to get pre-approved. That's where I come in. To get pre-approved, you have to have 2 years of taxes done. So you have to have a W-2 job for 2 years, and you have to live somewhere for 2 years. So that's where we verify housing and income for 2 years.
Quick question though. Could you have 2 years but different, like a W-2 and then a 1099?
If you're presently 1099, no, you have to have a full 2 years of just 1099,
right? Or 2 years of W-2.
Yeah. Okay. For W-2 is a little bit easier because if you're starting like a new job and you get a salary, we just use the salary income to qualify for you. They really scrutinize self-employed people the worst. I mean, that's a whole different conversation for me to have, but that's where I would start, is getting pre-approved, finding out exactly what you could afford, because there's a lot of buyers out here that think that they could afford more than they can or less than they can. You know, a lot of people are actually surprised. By how much they could get qualified for. Like two younger people that got jobs a couple of years ago, they both make $100,000, but they're going to live together. I mean, they could qualify for a jumbo loan, $700,000 because they have no debt. Their credit score is perfect. So I would start with getting pre-approved. After that, I would work with a real estate agent so they could help you out. You know, you have to find an area that you'd like and schedule showings and everything. But that's where I would start, is getting pre-approved, and talk to a realtor, map out where you want to be. Like that's very important, because a lot of people are all over the place. Like they say they might want to buy in Brickell, they might want to buy in Coral Gables, they might want to buy in Kendall. Yeah. Like if you're all over the place like that, you're not going to find anything, especially not in this market.
Find the area that you're looking for, the specific area, and just dive into all those properties there that you're interested in.
Specific areas and specific like criteria, you know. Like when I buy investment properties, I have a buy box. I have like a price range I want to be in, a certain square footage, and a certain amount of bedrooms. So I suggest buyers do the same, and that way they could really start narrowing down and finding what they really like. Got it. After they find a property that they like, they make an offer. Hopefully it gets accepted. That's a big problem in this market right now, is that a lot of offers aren't getting accepted. After it's kind
of like an auction nowadays, right?
Yeah, basically. If it's a hot listing and it's priced very well, if something's priced at market value right now, it's going to have multiple offers above ask. Okay. And stuff's going to sell above. And it's still like that right now. Yeah.
You sold a couple properties, that you listed for maybe $500K and they sold for $650.
Yeah. Right? $100,000 over appraised value. Yeah. Because what's really impressive is selling something over appraised value, not over ask. Because if you sell something over ask and it appraised for that over ask price, you just priced it wrong as a broker.
Exactly. Yeah.
But pricing stuff is definitely still selling to this day over appraised value, and I think it'll probably continue, it'll continue in the first-time home buyer price range in Miami, which is like $400,000 and under. Okay. Because as rates go up, people are going to afford less, and they're going to keep falling into that bucket.
Exactly.
So I think those certain properties are going to keep going up and keep being strong. But I am already seeing like a slowdown in properties priced $600,000, $700,000. Okay.
Yeah, I could see that.
Yeah, but going back to like the process of the transaction, you make an offer, you get accepted. After that, you do an inspection on it. Okay. Make sure that everything's good.
And there's a period during that inspection process or whatever that you can pull out of the deal if it's not what they promised, correct?
Yeah. So when you're sending them the offer, You specify the days you want for inspection. Typical right now is like 5 days. During that 5 days, you could pull out for whatever reason, you get your deposit back.
Okay.
After that, if you're financing, you have to order an appraisal. You have to get that done. During this process, you've got a loan, and everyone's got a loan. It's notorious. They're asking for a lot of paperwork.
Of course.
Paperwork you didn't even know that existed.
Yeah. They go through everything. They learn everything about your entire life.
Yeah.
Yeah.
And I kind of feel bad, like as a loan originator, knowing everything about my friends. But I mean, I'm getting them the best rate possible, the best deal possible. So it's notorious. And after you get the appraisal done and you get your conditions approved, then you go to closing. Right now, a lot of appraisals aren't coming in, so that's another step in the process that you have to renegotiate, maybe try to get the seller to come down.
Okay. All right, Julian. So just a quick question for you, because it's an interesting market that we're in right now, especially here in Miami and South Florida. That's a very hot market. You know, as we were saying, a lot of houses and properties are going way above appraised value or asking price. So how do you find a great deal in this hot market right now?
What I suggest for everyone, whether they're buying their first home or an investment property, is set up a buy box. I have a buy box. I want single family homes under 200,000 that are 3-2s in a specific city without an association. That's what I want. I suggest everyone to set up that buy box, and anything that comes up in that buy box, send them an offer. Even if it gets declined, I send offers twice a week at least. And if I'm not sending offers, even if it might be below ask, I'm not doing my job. You know.
Yeah.
So that's what I suggest to everyone to get started with getting a great deal. If they fall in love with the home, I don't suggest that strategy. Like you know, go make an offer over ask and like talk to your realtor on it. Say like, what's the best way for me to get that home? But definitely from investment standpoint, you have to have a buy box.
Okay.
You know,
that's an interesting perspective. Getting that buy box. I actually have not heard of that much. So that's actually a first. That's pretty. Makes sense though.
Yeah.
Like with stocks, for example, I have a couple screens of the requirements that I want a company to have, and I look for that. You know, or even when I'm buying a private business, I have a couple filters that says I'm only looking for businesses with these filters on.
Okay.
So it's similar, same thing.
So you basically use a buy box.
I use a buy box.
Just start using the term.
Yeah, exactly. Exactly.
There's a term.
Pretty cool. Yeah. So we're gonna get into a controversial topic because there's a lot of people getting into the metaverse right now, or digital real estate. What do you think about the metaverse, or the future of real estate in the digital world?
I always thought that digital real estate was like buying like domains. Like you can own domains. I think that's a good way to do digital real estate. Like you buy a domain and it goes in value, something that people search for. But the actual metaverse, I think it's fucking bullshit.
You think it's bullshit?
Yeah, I think it is. Like I hope the metaverse gets huge. So that way they're buying their digital bullshit ass properties, and I'm buying the actual properties they live in.
And you're gathering land.
At the end of the day, like for you to be surfing the metaverse, you got to be inside of a rental property or inside a house, which I'm going to own because you're going to be too busy buying that fucking bullshit land on the metaverse.
It's also, one thing I've always asked myself with crypto or with metaverse assets, if you're buying land in the sandbox or the metaverse, is how do you value that, right? And it just doesn't make sense to me. Like, for example, cryptocurrency, I just can't value it. And like when I ask people in that world, how do you value this cryptocurrency? I get to the point where they're just like, oh, it's a great project. It's going to go up to 100K. Bitcoin's going to go up to 100K. And I get that answer and I'm like,
but currencies shouldn't be projects.
They shouldn't be volatile.
Currencies are supposed to be currencies.
Yeah. They should not be that volatile. Like, it doesn't make sense to currency. So now they go, yeah, but it's a utility token, or it's a an NFT or this type of cryptocurrency. It's not really a currency. I'm like, okay, then what gives it its value? Oh, that people are gonna start using it. Okay, sure. People use the dollar. I wouldn't hold dollars as an investment because it doesn't produce me anything. So I'm like, okay, what is it gonna produce me? That's the way I look at an investment. And if you're not looking at an investment that way, you're just hoping for appreciation, which is what we were talking about. Speculation. And essentially, speculation is what creates bubbles, right? It's an idiot buying something and hoping to sell it to an idiot for a higher price.
Yeah.
And then that idiot buying it, hoping to sell it to somebody else at a higher price until there's nobody else to buy it. and then it crashes.
And then someone gets caught with their pants down.
Yeah. And I think I'm not anti-crypto or anti, that whole cryptocurrency or that movement, but I think there will be projects, maybe some NFTs where, like, okay, you buy this NFT and you get access to these events and this
Yeah.
network of people. That makes sense. Or maybe like selling tickets, but the majority of cryptocurrencies that I see, it's just speculation.
It's all a joke, really.
Yeah.
I mean, the only reason you hold currencies is because it's stable. The only reason we have cash in our bank account is because we know that when we wake up tomorrow, if we have $1,000 in there, it's going to be $1,000
Yeah.
tomorrow.
Yeah.
I mean, correct me if I'm wrong, but that's the only value of holding a currency.
Yeah. Yeah. And even if you're holding that currency, smart people or investors, people that are in the top 1% of financially, they're not holding currencies, right? They're buying assets
Yeah.
that give them cash flow with that currency. And the only time that they will ever hold cash, the majority of the time, is when they're saving up cash to put into an investment. But they don't see cash as an investment, right?
And going back to crypto, one of my favorite things right now is a lot of people before said, oh, buy Bitcoin. It's a hedge against inflation. What's happening right now? We're having the worst inflation ever.
Yeah.
What's going on with Bitcoin right now?
Yeah.
Good thing I didn't put any money in there. I mean,
Yeah.
I'd be down a lot. I'd
Yeah.
rather have cash.
Yeah.
You know, I'd rather have cash or
Yeah.
real estate. Real estate actually has been a real
Yeah.
hedge against
Or
inflation.
stocks, stocks throughout
Some of them,
time
yeah.
have been, the stock market in general, right? If you would invest in the S&P 500, of course, there's stocks
Yeah.
that are not good investments. Same way there's certain properties that are not good
Yeah.
investments either,
Yeah, definitely.
So,
Something that doesn't cash flow.
Yeah,
Like some people buy
exactly,
land, call it an
exactly.
investment.
yeah,
I mean,
exactly.
I guess it could be if you're speculating
yeah.
that it's going to go up in value
Yeah.
soon.
Or if you're buying farmland and renting it out to a farmer or something, that's an investment,
Yeah, it is.
right? If you're getting cash flow, but
Yeah, but you just buy an empty lot and just
Yeah.
say that, okay, one day it's going to be worth more
Yeah,
money.
you're speculating.
Yeah, at the
Yeah.
end of the day, that's what
Yeah.
you're doing.
Yeah.
But I mean, with inflation, you're an investor in the stock market and stuff. What would you recommend people to do right now to combat inflation?
To combat inflation, I think it depends on your competence, and this is what I mean. What I tell everybody and what I tell all my friends is when they ask me, what should I invest in? I go, something that you completely understand, right? If you're gonna invest in stocks, make sure you either put it into the S&P 500 and you say, okay, the S&P 500 is a bet in the United States economy in the future, which that bet has never been a bad bet, right? It's performed 9% historically, right, for last 50 to 100 years.
Yeah.
And it's going to most likely continue performing that way, right? Because you're betting on the bet, like the top 500 businesses of the U.S., which is basically the U.S. economy, and those businesses performing, right? And if you're going to be picking stocks, right, in the stock market, then I would say make sure it's a business that you completely understand, that you understand the value of the business. So you have to now know how to value that business. And you see that it's going to continue giving you that cash flow, right? The same way that you get cash flow in real estate, you can get that in stocks. The only thing is you might not get the cash flow in your pocket because the businesses get the cash flow, but you can see the financials and they reinvest that cash flow to expand their business. But if you understand that the value of a business is just the present value of all the future cash flows, right? And you understand that and you understand how to value the business, and now you value the business and the value of the business is a lot higher than the price that it's at right now, then it makes it a good investment. If you understand that and you're competent in that specific business or stock that you're choosing, then go ahead and pick it, which I would say is also the same thing in real estate, right? Yeah. If you understand how to find a real estate investment, you find this property, you're looking for a 10% return, and you find the property that gives you a 10% return, go ahead and buy it. So buy something that you're competent in. If you're not competent in anything yet and you're trying to get there, then I would recommend, buy an S&P 500 ETF, right? Where you're just betting on all these companies, which you're going to do good in the long run.
They're
right?
the top 500 companies.
Top 500 companies in the world, basically in the United States. And
which is the world.
Exactly, which is the world. Maybe buy some, or another option is, find an expert. Find somebody like Julian, find somebody like me that I have a hedge fund, or find somebody with a real estate fund and invest money there if you can. If you have, depends on the amount of money, depends on the type of fund, but find somebody that you say, okay, I understand his philosophy. He knows it a lot better than me. I'm going to invest with him.
Well, would you recommend someone to just put money in the S&P 500 or I guess an advisor for stocks? Like Merrill Lynch and
I would
Morgan
recommend
Stanley,
S&P 500 ETF.
Yeah.
The only problem, and this is a problem I see with people, is that you have to understand that the market itself, and you have to have part of investing, and this is a major part of investing, is not just understanding the investment, but it's understanding your emotions, right, and controlling your emotions. So it's very easy to say, let me buy the S&P 500. If it goes down, I'm just going to continue buying, right? The strategy that I would recommend is, you make, I don't know, maybe $1,000 every week or something, or every 2 weeks you make $1,000, right? If you're a person that you work paycheck you get a paycheck to paycheck. Out of those $1,000, put $100 every single 2 weeks or every single paycheck into an S&P 500 ETF, no matter the price, right? If it goes up or down, you're just gonna buy an S&P 500 ETF. This is the problem. When there's a correction or a recession and it goes down, right? When it's the best time to buy, when stuff is cheap, when there's blood on the streets, what do people do? They get scared.
They stop the auto transfer to the account. Yeah.
They don't even stop the auto transfer. They sell.
Oh shit. Okay.
And that's what happens, right? Like they do stop the auto transfer and then they sell because they see their portfolio maybe go down 5%, then another 10%, and then human psychology, you're unconsciously thinking that you're gonna lose the entire amount of money because you've seen that happen for the last 3 months, 4 months. So you're telling yourself, you know what? It's been going down. It's gonna continue going down. Let me sell at this moment when it's the time you should be buying, right? And then the opposite happens at the top, right? Yeah. Why do you think everybody got into crypto right now? Because what happens if everything is overvalued and you're in a bubble or you're in a very speculative moment in the market, in the stock market, or real estate? It happened in 2008. Yeah. Real estate, in crypto, and anything, right? And everybody around you is making money, even if you're not in there. This is what you're hearing. I'm hearing my friends say, oh, I just made $2,000 last week with this cryptocurrency. I just made $10,000 with this stock. I just made $100,000 in the stock market. And you're hearing this, and you're like, everybody's making money but me. Yeah. Let me put my money in. And everybody puts their money in the top, which is a moment of euphoria, when they should be selling in those moments.
You actually taught me that. You told me it's like a human emotion to buy the top because it looks good. It looks sexy.
It looks good. Like you've been seeing everything go up for the last months, and you're like, it's gonna continue going up.
Yeah, no one wants to buy when it's down in the dumps. I actually have an alert set on my phone. I'm an S&P 500 investor. I invest in IVW. I have an alert set with E-Trade that says when it's down 2%, I buy a few shares every time.
Yeah, exactly. And that's one of the best ways to do it. And you're never gonna go wrong just buying the S&P 500 consistently. In fact, it's been proven that anybody, and I'm saying this, I know it's controversial, I might get some attacks here. Anybody could become a millionaire if they start investing in the S&P 500 young. Anybody. Yeah. By the time you retire, you will have enough money to take care of yourself for the rest of your life. If you invest in the S&P 500, every single paycheck, you put money aside and you invest it in there.
Yeah. If you get like an interest compound calculator and you start when you're in your 20s and you put $500 a month on it, you'll literally be a millionaire no matter what.
Yeah, you'll be a millionaire no matter what. I forgot the numbers exactly, but you'll be a millionaire. Like if you start like at 18, I believe, I think you'll be a millionaire by like 38. I think it was like 40, depending on the amount of money you put. Like it's not you can even like, there's calculations you can do. You put in money for 10 years and then you never put money again. And that money will still be compounding to the point where you're going to be a millionaire by the age of 40.
If you get a 7% return, I think your money doubles after every 11 years.
Yeah.
That's only 7%. And you said the S&P does 9% on average.
Yeah, it does 9%. And for the last, I think it's actually the last, 9% has been like the last 50 to 100 years. But for like the last like 50 years, or I forgot exactly, it's been like 13%, including like dividends and everything.
Oh, that's awesome.
Depends on the time period you look at. But for a while, like it's basically going to generate you a 9% return. So the way that, and people don't understand compound interest, but they're like, oh, 9% doesn't seem like that much. But when you're compounding 9% every single year, it's a snowball effect, you know, like that's what that's called. A snowball goes down and it picks up more snow, and as it gets bigger, it's still picking up more snow, and it gets bigger and bigger, and you know, it's an exponential curve. It's not just a straight line.
Yeah, definitely.
Right. So that's Warren Buffett's ideology. That's how he made his billions, and it's simple math when you look at it, right? If you compound at this rate, you'll become a billionaire. Yeah. You could even, I mean, with money right now, if you start very early and you start making a little bit of money and you start putting that there, you'll become a trillionaire. Like, I'm not even exaggerating. You know, life expectancies are getting longer and there's inflation. Like, you're going to start seeing the first trillionaires in the next, I would say, 5 to 10 years.
Oh, yeah. Being a trillionaire is probably going to become like
being a billionaire. Like being a 100 billionaire will be like, that will be the same as being a trillionaire in 5, 10 years.
Back when we were like in high school, middle school, like being a millionaire was like a big thing.
Yeah. Now it's not that crazy.
Now it's not that crazy. Now, I mean, if you own a few properties, you're a millionaire.
Yeah. Yeah. Yeah.
That's it. Like all you have to do is own like 2 or 3 properties and you're a fucking millionaire right now in the year 2022.
Yeah.
And we thought that was crazy. In middle school, if someone was a millionaire, that guy was crazy. Yeah. Like that guy was making some serious cash, and now it's just not the case.
Yeah. And you know, I think just that's been, because back in the baby boomers day, that was like the goal, right? Make $1 million. So that we have to shift that mindset, right? Because people are like, oh, millionaire. I think having $1 million now is not that much. We have to change it to maybe $10 million. That would be equivalent to the $1 million.
But also, no one that has that much cash, no one that's worth a lot has that much cash.
Oh, no. Nobody.
Like, very few people have $1 million liquid. If they do, I think it's wrong. Because, I mean,
it makes no sense.
Inflation is
killing
7%, 8%, 9%, whatever it is. I mean, the true number is probably 20, but whatever.
Yeah, exactly. So, I mean, that's something that, and I hate when politicians say that too, because we're going to get into this too, because politicians are like, oh, let's tax the rich, right? Let's tax Elon Musk or Jeff Bezos that have billions and billions and billions of dollars, right? And either they're saying it because it's two reasons. Either they don't understand what will happen if they start taxing these unrealized capital gains, right? They don't understand it, or they do understand it and they want to destroy the economy, because it doesn't make any sense. Because you can't, like, sure, Elon Musk is worth $300 billion, but he doesn't have that in cash. In fact, he doesn't have that much cash. He has all that secured in Tesla stock, SpaceX stock, all these companies. He has them invested there, and these companies are hiring thousands and hundreds of thousands of people, and it's helping our economy grow. It's giving a bunch of people money. It's making a lot more money for investors as well. And if he were to be taxed on this unrealized capital gains, he's going to have to sell, which will destroy a lot of other people's money as well, and investments. And it will make the company itself also, it'll drop the stock price, which will make the company have to lay off a bunch of people, and it will just be terrible for the economy.
And actually, in the end, it'll produce less government dollars.
Yeah,
because they're going to make a lot less money. They don't realize that everyone that works for Elon Musk at Tesla gets a W-2.
Yeah.
Everyone that gets a W-2 pays a bunch of money in taxes, and those people turn around and buy other things, and the people that they're buying things from pay money in taxes. I think it's a flawed strategy.
I think it's a flawed strategy, 100%. And I think you know, like, I love when Milton Friedman explains this, because I'm not 100% a libertarian, but economically I shift a little bit more to that, right? From stuff I've read and everything. But he says, you know, I don't think we should really tax companies that much. We should really tax people's income. And this is something that, for example, when you tax companies, what you're not understanding is you're not taxing the company. You're still taxing people, right? Because if I say, okay, we have to increase the corporate tax rate for Amazon or these companies, right? Let's say this is Amazon right here. This wall is not going to pay your taxes, right? These microphones are not going to pay your taxes. The taxes are going to come out of people. And there's 3 types of people when you're taxing a corporation that will be taxed. It's either the owners or the shareholders, right? Or the owners of the business, the employees, right? Or the consumers of that product, right? And the way it is the people that actually decide who pays that in taxes are the shareholders. Who do you think they're going to benefit? Like, who do you think they're going to pass those taxes to? So normally it's a mixture of 3. What do I mean by that? To unpack this, what I mean by that is investors are going to have to pay more by taking less in income for the company, right? Which is the income that's attributed to the shareholders. Or employees are going to have to pay more because they're going to have to be laid off, or they're going to have to be working less hours, or they're going to have to be paid less because the company is not going to be making as much profit, which is in turn to hire employees, right? Or to hire a new workforce, or they're going to pass it to the consumers by raising their prices to maintain the profits they had before.
I think the answer is all of the above.
It's all the above. Oh. It's a mixture of all 3 when you tax corporations. So I think I would love to see an economy where corporations are not taxed and there's just people tax, and see how fast an economy would grow in that situation.
Yeah, really, the entrepreneurs take all the risk, and I think that's why they should reap the benefit for, you know, the taxes. Because, I mean, at the end of the day, they really do take all the risk. Like, they take all the loans, they put all the money down for expenses and whatnot, and these things are projects. Like, they end up turning out very successfully, the ones that we know about. But how many of them went bankrupt?
Yeah.
How many 100%. How many entrepreneurs took out a loan against their primary home, couldn't pay it, and lost their home?
100%. And the majority of businesses, I actually saw this. I went to an event and one of the speakers said this, and I don't know if it's true or not, but I think it is if he said it. It was that the majority of entrepreneurs actually start their business off a credit card. It's off debt. Yeah, it's off a credit card. That's their first initial investment, you know? And they're the ones taking the risk, right? They're the ones putting their name, their credit on this business, right? So then it's like, sure, now, like, the employees are going to say, okay, like, we want to get as much money as the owners or this or that. It doesn't make any sense.
They risk
any sense whatsoever. Yeah, they're risking. You're not putting any risk in.
I really believe in one point in time with every big business, the entrepreneur behind it, the CEO or whoever the president of the corporation was, he risked it all.
He risked
Or
it
he
all.
risked a lot.
You
Or
have
he
to
risked
go
a lot.
all in. If not, it's not going to succeed. You
Yeah.
have to go all in.
Yeah.
100%.
Definitely. Like, especially when you take out like initial loans, like if you don't pay,
Yeah.
like, they're coming after you.
Yeah, 100%.
coming after
They're
the
coming
company.
after you. Yeah,
When
100%.
When you're a new business and you're taking a loan, you got to personally guarantee that thing.
Yeah.
And if you don't pay, they'll go after your primary home. They'll go after everything.
Yeah. Yeah. Exactly. You know,
So-
that's why I say, like, being an entrepreneur, you have to have a high risk tolerance. You're taking on a lot of risk.
Yeah, you have to have balls.
You
Like,
have to. Yeah.
high risk tolerance is a,
Yeah.
is a good phrase, but
Yeah. You
I
have
just
to
say you
have
have to have balls.
Yeah, you have to have balls. That's what it is. It's true though. It's true though. You know, like you see these people. Like I don't know if you've seen Elon Musk, what he did with like his story of how he started SpaceX and Tesla and how he kept those companies alive. So when he sold PayPal, I forgot how much it was. I think it was like $100 million or something. And he put all those that $100 million, he divided into 3 companies. He invested it all, and he was about to lose everything. He said, like, the chances of me making it is very slim. Like, I'm about to fail, and like I'm gonna lose it all. But he went all in on all 3 companies, put all his money in there, and you know that's why he got so much of that reward, because he succeeded by working extremely hard. You know, he was working 100-hour weeks, and that's what a true entrepreneur has to do to be able to succeed.
He's the richest man in the world right now, right?
Yeah, he is.
Okay. That's great, but they should also, I mean, they probably shouldn't do it, but they should talk about, or people should realize all the stories of people that did that, they risked it all and lost it all.
Yeah.
And that's the reason why you have to incentivize entrepreneur by not taxing the hell out of them.
Exactly, yeah. You know, 100%, you know. But let's go to, because I wanna go back to, you know, the real estate topic and your company. So what's the future for iBuys? Where do you see iBuys in 5 years? What do you have going on right now?
So right now, IBuysSFL is my real estate brokerage. We have I think we have 13 agents right now working with us. I do want to expand. Right now, I'm in talks of expanding to Naples, which is a good market for me. And I've done some deals in Orlando, but I want to really expand in Orlando. That's what I want to do for the brokerage. I want to expand throughout most of Florida, like wherever the market's hot, which basically stops in Orlando. Jacksonville is also a big opportunity as well. As far as the IBuys Fund, I mean, in 5 years, I want to own a lot more houses. I think we're probably going to do that through construction because there's not that much inventory to buy.
Okay.
Especially not in the price range that we're buying it at. So we'll probably start constructing houses. That's what we're working on. We're working on getting plans approved and whatnot to build up in Central Florida.
So you're getting into the real estate development game then?
I hate saying
making hotels eventually, or what?
I hate saying the term development because I think in my head the development is building big shit like hotels.
Of course.
And I'm trying to build one single family home at a time.
Single family homes.
So that's why I say I'm building homes instead of developing. A lot of people also like to use these big fancy terms to make them feel like fancier.
Of course. Yeah.
I'm building one brick at a time.
Yeah. Got you. Would you ever want to get into skyscrapers or hotels too, or no?
I do. I would want to one day, but I want to make enough passive income that like I could do whatever I want. I think that's like the most beautiful thing about real estate is that you could really build passive income to cover all of your expenses. If you end up having kids, cover their expenses, cover everything. And after that, you could start experimenting on more things like building a hotel or a skyscraper. I mean, obviously with a hotel, like, there's a lot more risk. Like,
of course. Yeah.
You can't, like right now I could tell you for sure how much a house is going to rent for. A hotel, you have no idea. I mean, maybe there is
a lot
some
less
kind
complex, you know.
it's very complex. In hotels, you have other foreign revenues like the food, drinks, all that kind of things.
Yeah, makes sense. You know, especially those high-end hotels. You know, you have so many things that are going on. You know, you kind of have to have a huge team. You have to orchestrate that where you wouldn't as much in, you know, buying a single-family home and renting it out. You still need a team, of course, especially if you want to expand, but it's not as complex as that. But, you know, I see you buying the skyscrapers sooner than you think.
I hope so.
I see it happening.
Everything is sooner than you think if you really push.
Essentially,
I thought I was at this time. I thought I was only going to own 3, 4, 5 houses right now.
Yeah,
I have 25 houses. You know, it's fine.
Exactly.
So
that's
hopefully
awesome.
We just keep on pushing.
That's awesome.
I aspire to be as big as Invitation Homes. I don't know if you've heard of them. They own
Imitation or Invitation?
Invitation.
Invitation. No,
they own 80,000 homes.
Wow.
And they keep it all low key.
And they keep it all single family.
Single family homes, yeah.
Got it.
And they buy like in big bulk. They bought a big bulk back in 2008. They bought a big bulk in 2020 when COVID came and people were scared.
Yeah.
So they take advantage, you know.
Yeah. That's awesome.
That's something I aspire to be. But
you're gonna be the largest real estate owner in all of Florida one day.
I hope so.
I hope so too.
I hope so. It's hard. It's a tough task, especially with
Yeah.
the hedge funds and whatnot coming.
Yeah,
Coming about to
buying in
buy.
bulk, buying, yeah.
That's a big thing. I saw a video today that was explaining about that, and there's a lot of houses right now on the market that if they get bought by a hedge fund, they're never coming back to market.
Yeah, no, they're keeping it forever. They're not selling it.
Yeah, they're
don't
either
wanna
going to keep
sell.
it forever or they're going to sell it to a real estate fund or to another hedge fund.
Yeah,
part of
yeah.
a package
And they
deal.
saw the package deal. So they're selling 500,000 units at a time.
Yeah,
Easy,
yeah.
more
Yeah,
sometimes. Yeah,
Yeah, so there won't be a lot of the cheaper inventory because that's what they're buying. They're not buying mansions on the beach
Yeah,
and
yeah.
stuff.
a lot of them are even buying some like trailer homes. I've seen that.
That's a big
Couple,
business.
yeah. I've seen that. You know, I saw. I think it was a real estate fund bought down here in Florida, like 40,000 trailer homes, like a
Yeah.
whole community.
Yeah, it might have been Open Door Capital. Brandon Turner
Maybe.
owns it, and that's
maybe.
what he does. He buys trailer parks.
Yeah, that's the
And
guy from
Bigger Pockets.
right?
Yeah. Him and David Green.
Yeah,
are-
yeah.
I actually learned a lot of those guys while I
Mhm.
was starting my real estate fund.
They have a really good podcast. Yeah,
That was part of how I fueled it. Like I just
Yeah.
heard all these guys coming on that podcast and talking about it. So I look up to those guys. But yeah, the trailer park business is good. They actually only own the land and the people will rent from them the land.
yeah,
So they come, they bring their own trailer, they pay their own utilities. The only maintenance cost they have is the land.
the land. Yeah, so it's just very low maintenance business. Yeah.
But everything that's low maintenance, there's also lower returns.
Yeah,
You know?
of course. Yeah, I've seen that. You know, like I think they pay like $600 or something. per
Yeah,
month
it
or
depends where you
something.
are, but yeah,
Yeah.
that's common. $600 lot rent,
Yeah, got it.
and
That's
and,
interesting though.
and then like the owner just takes care of like the major stuff. Like
Yeah, like the grass. This.
they actually have a massive like some of the communities have a septic pool,
Okay.
so it looks like something that looks like a lake
Yeah, but it's for all the trailer homes.
full of shit and piss.
Shit.
Yeah, it's crazy.
All right, Julian. It's been a great podcast so far, but I wanna, get some. We're gonna go to the lightning round. This
Okay.
is essentially I'm gonna ask you. I'm gonna tell you one word, so it might be like a state, or a type of real estate investment, or a city, or maybe even a stock or something, or a company. You're gonna tell me bull or bear.
No explanation, just bull bear.
If you want to
That's
give an
it.
explanation, you can give an explanation.
All right.
All right. Florida.
Bullish on Florida.
Okay. New York.
I'm bearish on New York.
Okay. California.
Bearish.
Texas.
Bullish.
Miami.
That's tough.
That's tough.
A lot of people are gonna hate me for this. I'm bearish on Miami.
Bearish on Miami.
Yeah.
That's a big claim.
And I live in Miami.
I know.
I'm bearish in Miami.
All right. West Palm Beach.
Probably bearish, yeah.
Central Florida.
I'm bullish.
All right. All right. Let's go to multifamily.
I'm bullish on multifamily.
Condos.
I'm bearish.
Duplexes, triplexes, small multifamily.
I'm bullish. No HOA.
No HOA. Good. Co-ops.
I don't deal with co-ops, man. They only have co-ops in New York, so I am
know,
bearish
I
on
know.
co-ops.
All right. Let's see. United States overall, real estate
Oh shit! Overall,
overall.
damn. Probably bearish.
Okay.
I mean, compared to other assets, though.
Yeah. Gotcha. Okay.
Compared to other
So you
assets,
think they're
like,
gonna underperform the market, like overall?
there's a lot of hype behind real estate right now,
Yeah.
more than there's ever been.
Yeah, I can see that.
So people might be thinking that they compare appreciation from 2020 to now, when that's not realistic. You know, it depends who's looking at it.
Okay. Orlando. Let's keep on going.
I'm bullish on Orlando.
Manhattan.
Bearish, bro. Come on.
I think that about covers it. Maybe Zillow.
Oh, fuck you.
All right. So that concludes our podcast. I hope you guys got a lot of value out of this podcast. That's our entire goal. And I just want to ask Julian, if anybody's interested in using him as a broker or a realtor here in Miami, where could they reach out to you if they're interested in investing in the real estate fund, or just reaching out, asking him a couple of questions. I'm sure he would answer them. So where could they reach out to you if they want to get in contact with you?
My Instagram is Julian Chavez _RE. That'd probably be the best way.
Okay. I'll put that over here. Up here, you'll see that there.
Awesome. Yeah, they could reach out about the mortgages, real estate brokerage, the fund, investor properties, all that kind of thing.
Sounds good. Well, thank you so much for being on the podcast.
Thanks for having me, man.
For sure.